Despite a difficult year with a flat gold price, we still managed an attractive cash return to our shareholders in the form of a dividend. The current dividend represents a yield of more than 3.5%. And fortunately, we closed the financial year with a very robust balance sheet in terms of net debt. We have the Barberton Tailings retreatment plant, production of circa 20,000 ounces per annum, life of mine remaining 14 years, all-in sustaining cost, again exceptional, $392 an ounce. It really is world-class. Initial capital outlay was paid back in 18 months from when we commissioned the plant. Evander Tailings retreatment plant, as we call it, the ETRP, 15,000 ounces or more of gold production per annum, life of mine remaining 15 years, very much is linked to the life of mine of the underground at Evander. All-in sustaining cost, excellent, just over $550 an ounce. And again, initial capital outlay paid back in 3 years. Also, very importantly, the ETRP, as we've said many times in the past, has acted as a very substantial pilot for the Elikhulu project. Now, Elikhulu is our latest and most recent project, currently under construction. In the initial 8 years of operation, we would anticipate the plant would do an average of 56,000 ounces per annum. Total life of mine currently of 14 years with potential to expand or extend the life of mine. All-in sustaining costs forecast at below $550 an ounce, and forecast capital fully funded of just over 1.7 billion rand or $125 million. So I think it's very important to emphasize that post the commissioning of Elikhulu, more than a third of our total gold production per annum will come from these very low cost and low risk tailings businesses. At Pan African, we seek to be the gold investment of choice for all of our stakeholders, including for our shareholders, staff, employees and communities, and the regulators and governments in the areas in which we operate. In the universe of gold investment opportunities, we acknowledge that there are companies with longer track records and larger, more profitable assets. Where Pan African wants to be different is in achieving an attractive and unique balance between sustainable profits, cash returns to shareholders in the form of our well-established sector-leading dividend, and growth in profitable, sustainable production, and in our gold resources and reserves, cognizant always of the risks associated with growth. It's interesting to note the rock sample on the cover page of our presentation. It's an amphibolite schist from New Consort, number 7 shaft. Approximately 20% of the 7 kg rock is embedded with native gold. The sample was mined when Consort Bar at number 7 shaft was being mined some 25 years ago. I believe this serves as a reminder of the history and also of the richness of our Barberton operations. After all these years of mining, we are still discovering and exploring for new ore bodies at Barberton. We are listed on the JSE in Johannesburg and on the A market in London. As a management team, we are fully committed to both these markets. We have seen the benefit of this commitment over the last while. Our equity raises for Elikhulu and for the Shanduka PAR gold transaction were very well supported by South African and UK investors. And our shares trade very well in both these markets, particularly when one takes into account the relatively small free float available. We have quality assets with production capacity in excess of 250,000 ounces of gold per annum. This will be once Elikhulu reaches steady state. Very importantly, we would like to emphasize our current empowerment shareholding of approximately 26%. I would not want to spend a lot of time on political developments or the new proposed mining charter, other than to say that Pan African supports dialogue and constructive interaction that provides certainty to the industry and to other stakeholders within a framework that is reasonable and underpins the long-term sustainability of our industry. One of Pan African's key assets is our more than 34 million ounces of gold resources in South Africa, and we require this regulatory certainty to bring these ounces to account and create profits, employment, and economic opportunity for current and new stakeholders in our business. At Pan African, we have taken the conscious decision to maintain our empowerment shareholding. We are therefore not reliant on the once empowered principle. Ours is also real empowerment. We have created substantial value for our strategic BEE partners and also for employees participating in our employee share ownership schemes. To illustrate this point, ESOP payments made to employees over the last 3 years total more than 25 million rand. That is in addition to interest and capital serviced on notional funding on these equity interests. Gold production was impacted adversely by a number of operational challenges. Our production was down some 15% year on year, 173,000 ounces. The most severe setback was the failure of the 7-shaft pump column support at Evander, which resulted in a 55-day underground work stoppage at the operation. We also experienced flexibility issues at Barberton's 11 block and stoppages related to community unrest and Section 54s, specifically in the first half of this financial year. Even though overall costs were well controlled, as per usual, our unit cost of gold production was badly affected by the lower ounces produced, and all-in sustaining costs increased from $870 per ounce in the prior financial year to $1,177 in the current year. In the underground gold mining game, pretty much all of your costs are fixed. You therefore have to produce the ounces to reduce your unit costs, which obviously did not happen in the year that's passed. Now, these operational challenges were well flagged to the market, and in a presentation such as this one is tempted to gloss over the weak 2017 production numbers and focus on the exciting Elikhulu project and other positives. I need to, however, emphasize the following. Pan-African and operational management teams take the weaker 2017 performance very personally, and we have and will do literally everything in our power to ensure an improved performance in 2018. Mining in general, and specifically deep-level gold mining, is not a game. It requires absolute focus and commitment, and I can assure shareholders that they have that in the Pan-African management team. We have implemented concrete action plans to materially improve our operations and achieve the FY18 production guidance of some 190,000 ounces of gold or more. We're targeting an all-in sustaining cost of below $1,000 per ounce. That excludes Elikhulu, and that will lead to an improvement in margins and profits.